Hi, welcome back to the channel. In today's video, I want to provide you with an update as to what's happening right now with the war in Iran and, more importantly, what this means for the global economy. Because over the last 48 hours, we've seen some extraordinary events. We've had reports that an agreement was reached and news that the Strait of Hormuz was reopening. And on the basis of that, markets rallied, oil prices dropped sharply, and there was a real sense of relief. Phew, we can all go back to normal as if it never happened. But now the situation has changed again. We're seeing more reports that the Strait of Hormuz has just been closed again, with Iran responding to the ongoing US blockade of its ports. So the question we need to ask today is this crisis actually over? Or was that optimism completely premature? Because the markets have been desperate for this conflict to end. What I want to do in this video is not just talk about what's happening right now, but also explain the long-lasting economic damage that has already been done. Because even if this situation does stabilise, the impact is going to be felt for a long time. Now, I know a lot of you enjoy the graphs and the charts, and I've had a few comments recently saying that the ones I included in a recent video weren't big enough. So don't worry, I've got a big one in today's video in more senses than one. And it's really important because it shows what's happening with global oil inventories. So if you've been missing the charts, there's a good one coming up, don't worry. But before we get into all of that, could I ask anybody that hasn't subscribed yet to please hit that subscriber button? It doesn't take you more than a second, and it really does help me with the algorithm and also puts a smile on my face. So let's start with what we thought had happened. On Friday, Iran indicated that the Strait of Hormuz would be open again. Markets absolutely loved that news. We saw Brent crude falling by around 9% in a single day. That's one of the biggest single movements that we've seen in living memory, which is a huge move, and traders started to unwind the risk premium that had been built up during the conflict. And that reaction makes complete sense because the Strait of Hormuz is one of the most important energy choke points in the world. We've mentioned that many times, that around 20% of global oil flows through that narrow passage. So any suggestion that it was reopening was likely to trigger global relief. But the problem is that that relief may have been premature because now, with the US continuing its blockade of Iranian ports, Iran has responded by closing the strait again. So we've gone from crisis to relief straight back to uncertainty. And that tells you everything you need to know about how fragile this situation is. This is not resolved, it's not stable, and from a market perspective, that's very dangerous. Now here's the key point. Even if we do get a resolution, even if the Strait of Hormuz opens again tomorrow, the global economy has already taken a massive hit. Because over the last 50 days, more than 500 million barrels of oil have been lost from the global market, and around $50 billion worth of oil revenues have disappeared forever. And just think about that, what that actually means in real terms. That's the equivalent of 10 weeks of global aviation demand, 11 days of no road traffic anywhere in the world, 5 days of no oil at all for the global economy, a full month of US oil demand, more than a month of all the demand in Europe, and around 4 months of fuel for global shipping. They are absolutely staggering numbers. And this is why this isn't just a short-term disruption. This is one of the biggest energy shocks we've seen in modern history. Now let's take a look at the chart that I've promised you. As I mentioned at the start, I've made this one bigger today, so hopefully that keeps everybody happy because it's a really important one. And what this chart shows is the month-on-month change in global oil inventories going back to January 2025. Now, up until early 2026, we were mostly in positive territory, which means the world was building inventories and building buffers. If you look at the black line through the middle of this chart, that shows you the month-on-month change. The coloured sections, the bar charts, are broken down into all the different constituent parts of where oil was being stored. So everything was relatively stable up until the start of this year. But then from late February onwards, you can see a huge shift into negative territory. You can see that the black line drops remarkably below the zero level. And that tells you that instead of building buffers, the world started burning through its oil inventories very fast. Now here's the really important detail. The biggest negative on this chart is oil in transit. That's the blue section. But what that tells you is that this wasn't just about higher demand or normal usage. This was a logistics breakdown. Oil that should have been moving around the world simply wasn't moving. Tankers weren't sailing, routes were disrupted, flows were blocked. Basically, the Strait of Hormuz wasn't open. And as a result, the system started draining. We've already seen around 45 million barrels pulled out of onshore inventories in April alone. So the key takeaway from this chart is very simple. This crisis didn't just push prices up, it physically drained the global oil system. And that matters because once those buffers are gone, the market becomes far more vulnerable to the next shock. Now let's zoom out and look at the bigger picture. Even after the recent drop, oil is still trading at around $90 per barrel, just above that at the moment. And importantly, that's not because the global economy is booming, it's because supply has been disrupted. And that is a classic negative supply shock, which means higher costs for businesses, higher prices for consumers, lower economic growth, and persistent inflation pressure. And that combination is exactly what central banks do not want, because it makes it much more difficult to cut interest rates. It creates the risk of slower growth and higher inflation at the same time. And that feeds through into airlines, shipping, manufacturing, food production, energy bills, pretty much every single part of the economy. So even if this conflict ends tomorrow, the economic consequences don't just disappear. And this brings us back to where we are right now. We've got a ceasefire that may or may not hold. A strait that was open is now reportedly closed again, a US blockade still in place, and ongoing uncertainty around the nuclear situation. So from a market perspective, this is not a resolution, this is instability. And until we get clarity, there is always the risk of another spike in oil prices, another disruption, another shock. So the bottom line is this. Yes, markets celebrated. Yes, prices dropped. Yes, there was a moment of optimism. But the reality is the situation is still highly uncertain. The physical damage to the oil market has already been done, and in many cases, physical damage to oil infrastructure. And the global economy is going to feel the impact for some time. So this is not a story about everything going back to normal. This is a story about a crisis that may look like it's easing, but underneath the surface, the consequences are still building. So I'll keep you posted on any further news and developments as and when they occur. But hopefully you found today's video useful, informative, and most importantly, thought-provoking. If you've liked what I've said, or maybe you didn't quite like it, but you thought it was interesting, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Don't forget, I'm currently running my competition where you can win my property or a cash alternative prize. I'm going to post a separate video on that soon because a lot of people have been saying it seems to be going on for a long time, this competition. I'll give you some more details on it, but it is coming to an end quite soon. I've got some really interesting deals on the go right now. So if you scan the QR code on the screen now or click the link in the description below, then it's a fun way of getting involved and helping to fund the channel. Thank you so much to everyone that's supporting me in other ways. If you've bought me a coffee or sent me YouTube super thanks or signed up as a patron or a member, really appreciate that support. Thank you so much. Helps keep me focused and making as many videos as I can. As I mentioned before, the Joe and Naz channel is now live. This is a bit of fun. We'll put a smile on your face. And our latest video where we actually went to have a roast dinner, which was wrapped up in a Yorkshire pudding burrito. That sounds absolutely crazy, doesn't it? It was a really interesting concept. And we went along, we tried that. It's a fun video, so please go and check that out. We're still short of all of the YouTube metrics in terms of getting the watch hours up. So if you could go and watch that video. Also, please subscribe to the channel. I know over 1,000 people have subscribed already, but if you could join them, that would be fantastic. I think you'll enjoy it. It's a bit more lighthearted than some of the stuff I'm doing here. It's a whole lot of fun. Hopefully you'll think so as well. And here is something else to put a smile on your face. Oh, you'll find a link, at the end of today's video. It'll take you straight through to that Yorkshire burrito video. But in the meantime, here's something else to put a smile on your face.